Anyway, Dallas, talk to me, my man. What are 3 to 5 hard fast rules that you might have? And I don't know if you want to maybe use your little cheat sheet that you've created that you also have on your channel. If you're one of the first 1,000 subscribers for Dallas, he has like 6, 7, 8 pages of the school of hard knocks, if you will, that he's created over the last couple of years, being in this business, and he gives that to you at no charge if you're one of the first 1,000 subscribers. Take it away, Dallas.
So I got the whole document is very extensive, but um, we'll just cover selling puts right now. So I'm more careful with puts than I am selling calls because they can actually wipe out your account more than selling a call. So if you're just selling, if you're selling a covered call in particular, um, the worst that can happen is that your shares get called away from you. The only time you really run into danger there is if you're selling the call below where you own the stock. Otherwise, you're locking in a guaranteed profit. So I notated at the top, I'm more careful here with cash secure puts because even if you're able to roll, you will lock up buying power for a long time. And if you want to look up an example, Tesla of 2022 is a good example of that.
Right.
So for me, one of my first rules, these are pretty much all technical rules. For me, most of the things are technical, so I don't really have any. It doesn't necessarily need to be a stock that I want to own long term. For example, I think you're trading Snow as well, but I just closed out Snow today. Was only in there for a couple of days and closed that out at 50%.
Right.
After it was up like 5% or so today. These are basically some points that I created to help me. Like now, I can pretty much not refer too much to this sheet because you can just sort of look at it and gauge it after you've been doing it for a while. But this will be really helpful for newbies because if they're not great at reading charts or understanding options completely, they'll be able to look at this and say, like, okay, well, none of this has happened, so it's probably not a good time to sell a put. So the first point is it must breach the 1 ATR, preferably 2 ATR or even 3 ATR on a Keltner channel. So I like Keltner channels as opposed to Bollinger Bands, but most people have heard of Bollinger Bands. Keltner channels is very, very similar. Keltner channels just uses the ATR, stands for average true range, and Bollinger Bands use standard deviations, but they're
Right.
very close. I just prefer Keltner's because it's a smoother channel. Where with Bollingers, a lot of times you'll get big spikes, and it's kind of hard to tell. So whenever you put a Keltner channel on your chart, you have to add the 1 and the 3, but most of the time it'll put the 2 for you. So basically, it's a top line and a bottom line. So if you were selling a put, for me, I'd want it to be at or below that bottom ATR, just like you would with a Bollinger Band, because that's going to be a good area of support. But most of the time, I wait for it to get there because that's a good sign it's kind of already found its near term bottom. Secondly, obviously, you're going to open on big red days for puts, preferably, and then close or roll on green days. The third point, if a stock goes down and it looks like it could go in the money, these are for puts. Look to buy puts or put debit spreads or sell call credit spreads to help mitigate potential losses. So that's more of like how to defend them. I also have a whole down here ways to save a cash you could put go wrong. Um, and then fourth point, stock should be oversold on the RSI. Definitely below, I would say 40, preferably near the 30, but I don't always wait till 30. I like to use 30 to 40 days out. I like to use zero point 0.1 to zero point 0.3 delta. And then ideally 1.5 to 2% return on capital. I like to use 30 as close as I can to 30 days because it makes it an easy calculation for the percent return. So it allows you to look at and say, okay, if I'm getting a 1% return on the month, I know that's 12% for the year.
Right.
So that's another reason why I like to do 30 days out. But ideally, at least 1 to 2%. I know TJ, you use higher, probably closer to 3 or 4%. But um, if you're using more stable companies, 1.5 to 2% would be
Yeah.
a good return on your capital. And that just means however much capital you're putting up as collateral. So if you're buying, if you're selling, let's just say $30 stock, that's going to be 3,000 worth of collateral. So just 1 to 2% of that 3,000 would be what you would want to make if you did a 30-day contract.
Bill White, I know that you sell a lot of puts and a lot of calls, my man, and we can't thank you enough for the tracker first and foremost. And you actually taught me a little bit on the tracker. I had one of the members reach out and ask me something about the tracker, and dude, I actually was able to help him. I could not believe that I actually learned something along the way on how this stupid tracker works. But talk to me, because I know that you have your ideas on selling cash secured puts, and also, dare I say it, delve in a little bit to your preferred strategy to cash secured puts, because I know cash secured puts really isn't necessarily your go-to when it comes to cash grabbing as well.
Actually, I would say it is, but I would say the first thing I start with is I have a watch list, and I've kind of done some of the work up front. I know if it's a company that I would want to buy. So if I got stuck in a cash secured put, I'd be okay taking ownership, right? But
Right.
through that due diligence, really upfront, what I'm looking for is a stock that is worth selling cash secured puts on. I'm looking for something that's going to pay me a good amount of premium. And Dallas was kind of talking about it a little bit in there. I think he said 2% on his collateral. I do something similar. It probably comes out to a similar number, but I'm looking at my annualized return. So if it's 30 days out, I'm just calculating it and see what my annualized return is. And I typically won't sell a cash secured put on anything under 30 to 35% annualized return. Um, Oh, sorry, my computer was skipping a little bit. So for me, it's really kind of two buckets of stocks. I have my core holdings that I'll sell cash secured puts on pretty much whenever, especially when they're down a little bit. But it's I'm not looking at any technicals. I'm just very familiar with the price movements, and I know what my target range is for where I'd want to buy more. Then I have a kind of a separate watch list where it's good premiums. I'd be okay owning the stock if I got caught, but it's really I'm looking for down days to fire my first bullet. If it goes against me, I kind of work it out from there. Um, but if it does start to go against me, such as Celsius recently, I will start doing a bit more due diligence, and kind of where my expertise comes in is valuing companies and doing valuations and kind of see, all right, like, how badly can I get hurt here? Like what's where do I want to roll down to? Because I don't want to, like Dallas was saying, I don't want to kick it out to the end of the year every time I do it, right?
Right.
So it's really about like where do I fire my next bullet? And there's a big part of being successful in cash secured puts is when it goes against you, knowing how to get out of trouble. And that's really the fine tuning that I think over the past couple years I've really kind of you know I don't want to say perfected, but I've been able to get out of everything pretty fast and pretty easily. But I will say that having the capital at your disposal really makes it much easier to get out of trouble if it goes.
Agreed.
So you're not in margin for any of this. You're not using margin for any of this.
Oh, I do. Cash secured puts I do for sure, but I've never actually taken ownership of stock on margin.
Right.
Gotcha. Garcia, you're essentially
What's up, man?
80%. You're about 80% Palantir on your portfolio. Look at
Okay.
this. He's like, fucking, you're like Team Amit over there.
Yeah.
So, so what are your hard fast rules on selling cash secured puts, because we're going to get into cash secured puts and we're going to get into covered calls, and we'll do live Q&A. We're going to really get into the weeds today for the benefit of a lot of people. I know Dallas is going to have to exit stage left in about 30 to 45 minutes, so we're going to try to get as much input as we can out of Dallas before he leaves, because he's a wealth of knowledge as well. But real quickly, Garcia, have you already developed, because I know you've been doing this for not really that long of a time, have you already developed your 3 to 5 hard, fast rules for selling cash secured puts on the stock to begin with?
Rules number 1 and 2 are not selling cash secured puts on a company I don't understand like fully. Like, which for me, that means no company other than Palantir. Not even Tesla, not Enovix, not Enphase. As much as I love those companies, I could see a reality where, let's say, Tesla, could start tanking for like reasons that I don't know. And because I don't have that conviction, I could feel that I might be bag holding Tesla for a while. Whereas a real Tesla bull will be happy to have shares at 150, at 120. But
Correct.
let's say Elon gets into some other BS and the stock starts tanking. I won't have that same conviction as if Palantir, went through a dump. I would gladly buy Palantir at 17, at $10, at $6. I would gladly, start, doubling, tripling, quadrupling down. So for me, it's just highest conviction stock. I'm going to be selling cash puts. Rule number 3, I guess, is selling them about 2 strikes, 1 or 2 strikes where it's currently at. Just because I'm pretty comfortable with Palantir's moves, I feel like I can maneuver those cash puts and roll them out in case they get tested. Because like
Right.
Bill White, I also sell cash puts on margin. So for me, I avoid assignment on either side at all costs. I don't consider myself a wheeler. I just sell options on, Palantir, and I collect premium on both sides. And I'm just going to roll up and out on my covered calls and roll down and out on my cash secured puts. As soon as the extrinsic value I calculate and it's at 10 cents, at 15 cents or less, that's when I'll start kicking the can down the road, maybe 14 days out, 30 days out. And, and it's been working out. Like, I was kind of running the numbers on my big account, which is like right now it's at 89,000 right now. But since I started focusing only on Palantir, selling covered calls and cash secured puts, I've been outperforming Palantir since I started doing this. So
Right.
for me, I'm seeing it work for me. Even when Palantir pops, 10%, 15%, I'll just kind of roll as high up as I can, as close as I can, in time, and just keep inching my way up and out, So for me, that it's been working for me.
And if it's working and you're comfortable, then it's really working. Because if
For
you're
me,
doing something that isn't causing you any stress and it's
yep.
making you money, and if it tanks, it's legitimately an opportunity. I think that you're in the right stock for you, because the golden rule for selling cash secured puts, guys, I don't care what anybody says, who anybody is, what their credentials are or aren't, is do yourself a favor and be fucking bullish on the company. Like, do yourself a favor and be bullish on the company, because if you're out there being a premium drunk, a premium drunk junkie, you got what's coming to you, and it's happened to me a few times.
Yep.
Like, no one to blame but yourself and your greed. If you get in a situation that you're selling cash secured puts on the GameStops of the world or Rivian because the IV's through the roof, and you're just trying to go grab that bag, and then all of a sudden you look at your bag and holy shit, it's real heavy, and I'm bag holding.
Mm-hmm.
So just know what it is that you signed up for. It's a broken record theme on the channel, but know exactly what it is that you signed up for. And if you're going to be selling cash secured puts on the stock, do yourself a favor and make sure that you're legitimately bullish on it. Because if it goes south, that creates opportunity in your mind versus a bunch of stress. And you don't want to be creating a bunch of cortisol in your brain and getting fat and stressed out and getting ulcers. It's just worth it.
Yeah, and right now Rob is asking how much I'm outperforming. So since Q4 earnings, like right before, Palantir was at 1672. So that's like a 43% return since earnings. And right now, so 43% on Palantir, whereas my portfolio from that time frame is up 58%. So the only reason I'm right now, my portfolio is 26% year to date, and Palantir is like at 40% year to date. The only reason I'm not outperforming year to date is because the beginning of January, I was a premium drunk on Marathon.
Right.
And because I was selling cash secured puts on Marathon, and then Marathon started tanking, I thought, holy shit, I got caught, with my hand in cookie jar, and I don't know what that jar even has. It could be a jar with a bunch of traps, a bunch of insects I don't even know about. I don't know if they're cookies anymore. Whereas if it was with Palantir, dude, holy shit. Like if I was selling cash secured puts on Palantir in January, I would be up like maybe 60% year to date, like 50. So right now, it's ever since I went all in on Palantir, selling cash secured puts, covered calls on Palantir, and buying shares. And right now, Carl was asking if I reinvest my premiums. I reinvested back into Palantir shares in this account. Yeah, mostly just everything on Palantir right now.
Bulls and the Bears, Matt. I would love to hear what's in that brain of yours. If you've got some hard, fast rules on selling cash secured put, because you said something on, you responded on X, and it was I think Brian just Wheel It or whatever his handle is was saying something about he likes to use the 2 and the 3 deltas, and you're like, essentially I disagree with just that, or that as being like the deciding factor, determining factor. So what is going on in that brilliant mind of yours? You developed over the last, because you're like a legitimate wheeler. Like whenever these stocks get put on you, you act like you contracted a stock TD, sort of a stock STD.
Nice.
You want that shit off the books as soon as possible.
Right.
Get down with stock today. So what's going on, man? What kind of hard, fast rules do you have with selling cash secured puts?
So yeah, I have two simple rules for both calls and puts. One rule applies to both, and that is, I think I heard Bill talking about this when I joined late. By the way, I'm 0 for 3 with tuning in on time. 30% minimum yield on the premiums. And I say yield because that accounts for the annualized nature. So a 30% annualized return at a minimum. And I use that over delta because I feel like, well, I'll talk about the delta part after, I guess. But I feel like we can't forget that when you sell a call or sell a put, there is a trade-off to that. There's a downside to it. I mean, you sell a put, you're exposing yourself to that stock and a possible drop, right? If you sell a call, you're limiting your upside. So those are both downsides to selling those options. So I want to make sure there's something in it for me. Like I want to make sure I'm getting paid enough to take that risk. And for me, I picked 30% because of that other Wheeler YouTube channel, Marcus Highcotter. Yeah. So they said 30%. I gave it a shot. I like it. So 30% or more is what I look for. And for puts, the second rule is it needs to be at historical support because I want to make sure, one, the put has a good chance of expiring worthless because the stock is likely to bounce or maybe not move much lower because it's at support. Or if I do get a sign, there's a good chance that shortly thereafter it's going to pop up because it's at historical support. So I just want to put the odds in my favor that way, which unfortunately means I don't play things like Robinhood right now or Palantir right now because they're kind of just up and away and not necessarily at support. And I don't want to be caught on a correction way at the top of a bullish move. You know what I mean? Because then it might take a longer time to get back to that level as opposed to a stock being bought at support. And then my second rule for the covered call.
So real quickly, just to clarify on support, because there might not be a lot of people that are technical investors, because you and Dallas have both come in from a very technical mindset to sell these cash secured puts. And then there's others like me that are very, very familiar with technicals, but at the end of the day, we feel like fundamentals trump technicals. And I think a lot of people feel that way because A technical will tell you when to get in and when to get out, but fundamentally you have to buy into the narrative, right? And so,
Absolutely.
what are you talking about? A 200-day moving average? Like, what are you talking about? Historical levels of support?
Yeah, and just to clarify, I also do fundamental analysis. I do make sure the companies I play with are profitable, revenues increasing, but I just also want that added layer of protection of the support. And in my case, it's literally like as simple as it gets, and that is just a horizontal, band of what you might call a demand zone or support level. So, for example, Disney, when Disney got down to like sub $90 last fall, I was looking at it and I was saying, wow, every time Disney got down to 85 ish for the past decade, it's
Right.
always been supported there. Like it's rarely gone lower than around $85. So to me, that's like 10 years of historical support of Disney, of buyers stepping in around that level. That would be a good spot to pick, for example. And so it's just that simple. I don't really use moving averages. I want like just areas where it's clear buyers step in and prop up the price. So just like your horizontal
right now.
support,
I don't know if you guys are watching, but it looks like Enphase is going to retest $93. I know you're looking at that, TJ.
I started selling puts again. I've got puts at 100 that I'm looking to take ownership of at 95, and then I'm gonna go nuts if it goes into the 80s.
And go, yeah. And then
Because
there's a massive gap in
I
110.
will get to 15,000 shares because at that point, some deals become stupid, dude, and you have to be willing to get paid. It's like a piece of real estate. If you know for a fact that you've done all the research, you're like, I know this area is going to print in 3 to 5 years, but right now it's on sale. Like you're going to make your money there whenever nobody else is wanting to dance there, but you're going to realize it down the road. And to me, Enphase, if it goes back, because I'm pissed off that I don't have more shares in that $80 to $90 range, it's already given this opportunity to me before.
Mm-hmm.
But I had blown a real big wad in the $140 and $50 range. So I was like, well, I'm not the Fed. I can't just go print millions of dollars. So you have to play within the confines of your budget, right? But anyway, guys, the things that I look for first and foremost is what everybody should be looking for is, do you want to own these shares? Why? And then it really gets down to the nitty gritty. And the real question that I ask myself is, do I want to own these shares right here, right now? Like, why am I even selling a cash secured put versus buying the shares, selling a covered call? Because then now you have two ways to make money. I have the premium from the covered call, which is going to be very, very similar to the cash secured put, but then I have potentially the upward, the capital appreciation of owning the 100 shares of stock versus only being confined and limited to the cash secured put premium, because that is all the money that you could ever make selling cash secured puts. Give me a thumbs up if you agree with me. There's no more money to be had. You sell a cash secured put and you collect $1,000, $3,000, $20,000, whatever it is. There's no more money to be had aside from that premium. It either expires in the money, it expires out of the money, then you're stuck with a different situation. But there's no more money to be had aside from the premium. So I am legitimately looking for a stock that I want to own right here and right now, because that is going to position me to sell the most aggressive cash secured puts possible, because I don't really give a shit at that point, because I would have just as soon as bought the damn shares anyway. Like when I'm first entering into a cash secured put on any company, it's almost like I'm reluctantly selling a cash secured put, because the book that I'm writing says it's the responsible thing to do financially. Because the last time I checked, if I look at the historical evidence of my portfolios, TJ doesn't buy stocks and they start going to the moon. They typically go down historically because they suck. Right? Like, I mean, am I the only one? Give me a hands up if you're willing to admit that you can't pick the bottom to save your life. It's very difficult to do, guys.
Oh,
It's
hell
really
yeah.
these damn things, like, it's almost personal, bro. TJ bought. I'm gonna go down 20%, fucker. I'll show you. And I feel like these stocks are making fun of me. So because they made fun of me for so long, I was like, let me get into these a little bit more responsibly. Let me sell some cash secured puts instead of just buying them here. So I'm real trigger happy trying to buy shares all the time. So I like owning shares. Look at the portfolio. I love owning shares because shares don't expire. Give me a thumbs up if you agree with that notion as well. I know that occasionally the IDEXs of the world can damn near go to zero, but for the most part, if we're dealing with a reasonably healthy company, a legitimate company, shares don't expire. And options do. You don't have to manage shares. So I like tying up 50, 60% of my portfolio in share ownership. So I'm looking for a stock that I want to own right here, right now, so that I can maximize my premium potential, my premiums return by selling very aggressive cash secured puts, because then now my mindset is I'm indifferent. If I take ownership of these shares, fantastic. I'm going to sell very aggressive covered calls, and now I got a shitload of premium going in, and I'm getting a shitload of premium for potentially getting out of this stock and just wiping my hands clean, because this is what irritates me, is I find a stock that has a real good setup, and then I sell a cash secured put, and now this damn thing goes up 20%. I make a shitload of money on the cash secured put, if you look at the time value of money and all of those other things. But then now it's like, oh shit, now I got to go do more work and go find another stock that gives me another setup, because this one got away from me because I didn't have the courage of my conviction to take ownership of the damn shares right here, right now. If I'm legitimately long term, own the fucking shares, sell covered calls, and let's get on with the program. So there's that. If I'm starting brand new with the stock. Now, whenever I already own a stock and I already got a real healthy position, then I'm going to turn into Matt and Dallas a little bit and start looking at, okay, how's the overall position look? Do I have covered calls that are getting away from me? Let me start strangling the stock with cash secured puts, because then now I can be more stingy with my extrinsic value on the covered calls and so on and so forth. So there's like a lot of other metrics that I look at. And I also like to look at my 50 and my 200-day moving averages, because those are pretty solid levels of support. And I'm like, okay, if I'm like a little unsure about the company, I haven't done enough homework in it yet, but I want to nibble, then I'm going to start looking at some technical levels to help me out, to keep me out of harm's way, because the conviction isn't there yet, because I haven't done my homework. Because raise your hand if you believe that conviction is correlated to the amount of work that you put in studying the company. Like if you know what potentially it is that you're going to own, you're at ease, kind of like Garcia with Palantir. You're at ease, like Dallas with CrowdStrike and Amazon. He's only just monitoring positions. He's not second guessing his ownership of the companies. And I think that's where the big disconnect is my goodness, dude, do a little bit of homework on the freaking company and don't just study options chains, because that's going to go a long way in keeping you out of trouble psychologically. And then the other thing that I have is a very hard, fast rule, and it's my rule of 500. If you legitimately cannot own 500 shares of that stock, I personally do not believe that you're adequately capitalized to be wheeling and dealing with that particular stock, because now you're painting yourself into a corner to where you have to be right here, right now. If this shit goes south, it doesn't present an opportunity for you. It presents more of a disaster scenario. And that's why I like to have adequate capital at my disposal to deal with some of these stocks, because I have a lot of historical evidence that says I'm not going to pick the bottom. More than likely, the shit's going to go down. I think it's a good deal. Enphase, I think, is a good deal right here at 100. The market might tell me it's not really a good deal till it gets to 60. So I have to, no, I'm saying I have to be prepared for what Mr. Market says, because it doesn't matter what TJ and his intrinsic value calculation says. I don't set the market. So those are the things that I look at, guys. I'm like, I want to own the stock right here, right now, because that's going to give me a lot of latitude on cash secured puts. Because it's almost like I'm selling it. Like I'd rather just buy the shares and sell covered calls, because I'd rather play that side of the coin, because there's potentially more upside there. And the downside is really kind of the same, because if the stock goes down and you own it, you're screwed, right? If the cash secured, you're in a cash secured put and the stock goes down, you're screwed, because either way, you're going to have to figure out how to navigate yourself out of those rough waters. and make sure that you're adequately capitalized, man. I don't think that that is talked about enough. So I'm making it a point to bring it up more frequently on this channel, is make sure that you don't have champagne taste on a beer budget, because I just don't think that your business is set up for success there. You're putting a lot of pressure on trying to be right while we're playing price wars with the market.